You can reintroduce yourself. My apologies.
All good. Stephen Dominic with Legacy Mortgage. We're going to be starting this VA Home Loan Benefit Seminar. Quick bio on myself: certified veteran mortgage advisor, a loan officer with Legacy Mortgage Group, paratrooper, U.S. Army, Charlie Company, first of the 143rd. We were out of Rhode Island National Guard. Did a deployment, Afghanistan, 2012, Operation Enduring Freedom. Did pretty much, I was a security element for what was called a provisional reconstruction team, where we go in and try to build back that local area that we are serving, and we provide security to engineers and people doing something called key leader engagements. So pretty much security. I was an infantry guy. I'm currently an active law enforcement officer, detective with the Fort Lee Police Department, Northern New Jersey. There's a cool guy photo of me, a badge, and that's my company logo. We're going to get into Alex's info here. Alex, you could take it.
Sure. Hey, folks, thank you for joining us. Thank you for your service. We do this because we do have a passion for it. The reason I became a realtor is because when I left the military years ago, my realtor did not tell me about my VA benefits. And after I purchased my home with a different type of loan, I was kind of upset that nobody told me about this product. And the realtor didn't have education, so I made it the goal of mine to educate fellow service members and to give them the best representation possible. So my info is at the bottom, or at the bottom of the slide. If you want to move on to the next slide, Steve.
Sure. And folks, please save this info, because if you do have questions outside of this, you can reach Alex or myself direct. So please record this information.
Absolutely. Yeah, those are my cool pictures. But currently, I am a director of Compass Military Division. Military Division is the largest VA or Veterans Network, referral network throughout the United States. So we have Compass offices throughout pretty much 50 states. But Compass Military Division, it was just started recently, and we are growing this network daily. We have agents who are veterans, and then obviously we service those who have served. And I am the regional director for Philadelphia area. I am a licensed realtor in Pennsylvania and New Jersey. I have an ePro designation. That just means I am very proficient at anything electronic. My last duty station was 101st Airborne Division, 326th Engineer Battalion, Bravo Company, and I am air assault.
They say that's harder than airborne school. Alex, what do you think? I don't know.
I never been to airborne school, so I can't say.
I'm going to say airborne school is harder, and I've never been to air assault. But that's
I'm going to say otherwise, but hey, friendly competition. All right. Yeah, I did three and a half years active military service at the end of, in 1996 to 2000, basically. Served in Germany, served stateside, been deployed to Panama, and I've, at this point, been 20 years in real estate.
All right, we're going to continue on. Here's my certification. This is a group that I teach loan officers and realtors throughout the U.S. So I am certified through this group called Veteran Mortgage Advisor, and I'm an instructor with this company. So pretty much I travel mostly throughout the state of New Jersey, teaching realtors and soldiers about the VA home loan benefit. And we do it on, Zoom throughout for loan officers throughout the U.S., all over California, Florida, all 50 states. So, my mission to educate is through this organization that I became certified in. Our mission statement here: assist my fellow veterans with the home purchasing process, educate realtors and the lending community about the VA home loan, and encourage military home ownership. That's what we stand behind. So, what is a VA home loan? It's a loan, it's a mortgage that's guaranteed by the U.S. Department of Veterans Affairs and issued by a private bank, credit union, or mortgage company. So the guarantee, that's a huge thing. These loans are very secure and investors love them because in the event that you would default, if that ever were to happen, the investors guaranteed 25%. So that's why VA loans naturally have a lower interest rate because of the lower risk. And that's due to the guarantee by the VA. So what are some of the benefits? Why is this product so good? 100% plus financing. You can't really do that anywhere else. I mean, there are some down payment assistance programs with other loan types, but nothing's going to be as good as VA. And it says 100% plus because that includes the funding fee. You can finance the whole home and the funding fee. No private mortgage insurance. You will never pay PMI on a VA loan, regardless of the credit score. Even if you're sub 600, you're not going to pay private mortgage insurance. If you, for instance, you need a 620 for a conventional loan, if you have a 620 credit score and you're putting 5% down, the PMI payment is going to be very, very strong. VA, you're never going to pay that. You know, it could be a few $100 a month. It won't be there on a VA loan. No loan cap limit. So Blue Water Navy bill, that was signed in 2020. Essentially, if you qualify, I'm going to give an example here for $1 million home purchase, you could put no money down and get $1 million VA loan if you qualify. So that was originally limited to the conforming loan limits, but in 2020, they removed that. Lower interest rates, like I said, because of the guarantee. Typically, I'm seeing like half to almost a point lower than your standard rates on conventional loans, especially on the lower credit score loans. Very, very, very flexible underwriting. I've closed VA loans where I would not have been able to close those loans if they were a different product like FHA or conventional. So very flexible. Not everyone will qualify, but if you do have some blemishes on your credit, VA is very forgiving on that. So how do we qualify? There's two things, right? Eligibility and qualification. So to be eligible for a VA loan, you have to serve an active duty in the Army, Navy, Air Force, Marine Corps, Coast Guard after September 15th, 1940, and discharge under conditions other than dishonorable. After 90 days of active service, any part which occurred during wartime, or 181 days during peacetime. We are still in a wartime designation. Big thing that was added in 2020, serving on active duty under Title 10 or Title 32 orders for a period of 90 days with at least 30 days being consecutive. It was always Title 10 only. Title 32 orders was added in 2020 under that Blue Water Navy bill, and that is directly related to your National Guard members. So if you're Army Reserve, active duty, active Air Force, any active branch that is a federal designation, orders will fall under Title 10. Title 32 is those state orders, essentially orders from the governor. So once they added in Title 32, for example, a lot of COVID missions that National Guard troops were serving under, they became eligible for the VA home loan. If you have no deployments, no Title 10 or Title 32, and you've served 6 good years in the National Guard or Reserve with 16 points and receive an honorable discharge, you will be eligible for the VA home loan. Alex, is audio still good?
Yes, sir.
All right, we're going to continue on. Certificate of eligibility. You need this document to close a VA loan. If you don't have this and you're pre-approved, you should not be looking at houses. So if you are in the pre-approval process, somebody sends you a pre-approval for a VA loan, you need to ask them, do you have a copy of my certificate of eligibility? You could pull it yourself through the VA, but lenders like myself, I have direct access to the VA website through WebLGY, and I could pull that document. This is the document from the VA that confirms your eligibility for a VA home loan obtainable through e-benefits or directly from your lender. So if the COE is not readily available, what documents will I ask you for? If you're on active duty currently, I'm going to ask for a statement of service and your current orders. If you're a veteran, I'm going to ask for your DD-214. National Guard NGB 2223, that's the point statement. Remember, we talked about points, so I'm going to look at the point statement, upload that to the VA to generate the COE. Reserves, statement of service, point statement as well. This is what a COE looks like. So like I said, if you are pre-approved, you want to ask your lender, do you have a copy of my COE? They send it to you. This is what it should look like. This is what they all look like. Obviously, the names will be different. Loan estimates. When you go under contract with a lender, they are required, after uploading your file, to send you a loan estimate within 3 days. You need to pay attention to this document. Don't just sign and drive with these docs. You need to ask questions and pay attention. This is what it looks like, right? This is the front page. You'll see a loan amount, you'll see an interest rate, you'll see a monthly principal and interest payment. What you want to ask when you get this is my rate locked? You will determine that on page 1 in the top right-hand corner, because if they shoot you a loan estimate and it's locked, then it's official. The rate will not change. If it's not locked, it could change. It could go down, which is good, but it could go up, which is very bad. Top right-hand corner, you'll see on the bottom of that white box, rate lock, yes, and the date. Loan estimates continued. You also want to know, what is my rate and what is it costing me? Section A on a loan estimate will tell you the rate cost, if any. You also want to look in Section J to see if there is a lender credit. Here is Section A on a loan estimate. If you are shopping lenders, that's how you compare apples to apples. See on the left-hand side, no charges there. And then you see on the right-hand side, origination fees and discount points. Those fees in Section A is going to be a cost to you at the closing table. So you need to pay attention to that. If you are ever under contract and you are comfortable with who you're using, you can call me. I could review that for you. And I could tell you, hey, based on that market and your credit criteria, that person is giving you very good terms. And I will also tell you if they're not giving you terms, good terms. Tier 2 entitlement. So common myth I hear a lot. You can't have more than one VA loan at a time. That's the question. Can we? Yes, you can. We calculate remaining entitlement based off your COE, which is that document you saw before, and determine the max loan amount with 0 down. So right now the conforming loan limit's about 766. So essentially, you could own 2 properties up to that conforming loan limit. If you bought the first property for $300,000, let's say that was back 2018, you could then buy another property for that 466 to make that conforming loan limit. So yes, you could have more than one at a time. I've closed VA loans with 3 on the COE. It's all based off entitlement. It's not a one-time use benefit. It's not one and done. It's not, you could only have one at a time. If people tell you that, it's wrong information.
Steve, and a quick question, does the amount vary from state to state, or is it federal?
The amount will vary based off of the county loan limit. So where I live up in northern New Jersey, we have a lot of high cost counties. My limit up here is 1,146,000, and the conforming loan limit is 766. So you'll see that if you're buying in a high cost county, the purchasing amount will be much higher that you could borrow. So good question. Yes, it's going to be based off of the county loan limit.
Yeah, and there's a reason I asked that question is because of that.
Yep, absolutely. So, quick example, I closed a loan last year where Mr. Cooper was telling the vet, hey, you got to take a HELOC for 150,000 on your primary for your next VA loan. They were using the conforming loan limit for the calculation, but he was buying in a high cost county. So I was able to close him on his second home, 550,000, no money down, because the limit was higher. So it's just lenders don't understand that, and they could give you wrong information. So we got to make sure about that. So can the loan amount be higher than the maximum amount determined? If I tell you you could borrow 400,000, no money down for your second VA loan. Well, if you say, Steve, I want to borrow 500, how do we do that? Yes, you can. You got to put money down though. So it's 25% of the difference. So if your maximum limit is 400 and you're buying a home for 500, $25,000 down will be required. If you have no properties retained with a VA loan, remember there's no limit. So that does not come into play. This is only for retained property, tier 2 entitlement. Can you have a VA home loan after a foreclosure? Yes, you can. There's a 2-year waiting period before the veteran can be eligible again. Entitlement from the home that was foreclosed on will not be restored. So that's essentially us using tier 2 entitlement. If you foreclosed on a previous home, we have to use that tier 2 entitlement calculation. You will have a loan limit with a prior foreclosure. Audio still good, Alex?
Yep.
Funding fees. VA loans do have funding fees attached to them. For first-time use, 0 down, that's 2.15% of the loan amount. $500,000 loan, it's going to cost you $10,750. Subsequent use, 3.3. Could get a little bit more expensive, 16.5. You'll see how it increases. So if you used it once, then you go to use it again and you're putting no money down, that's the fee that you're going to pay. Very important thing here. Funding fees are waived for veterans or service members that have a service-connected disability of 10% or more, or if you are serving on active duty and you're a Purple Heart recipient. So I highly encourage everyone, if you do not have a service-connected disability, get with a local VSO and apply for service connection, because it will save you a lot of money on these transactions. Now, these funding fees are not paid at the closing table. They can be if you want, but typically we roll them into the loan amount. That's where that 100% plus financing comes in. Another very, very, very important topic. If a disability claim is filed prior to the loan closing and the claim is awarded at 10% or higher, the VA will refund the entire funding fee. 10%, I say, is because that is what you need to receive monthly compensation, and that's how the VA designates whether you are funding fee exempt or not. So I've done this multiple times where I've taken loan applications. I see that the veteran is not funding fee exempt. I have this conversation. Hey, have you applied for a service connection? Do you intend to apply for a service connection? If the answer is yes, that you intend or have applied, it's very important for us to know that, because if we close your loan and you're not service connected yet, you pay that funding fee. When you do become service connected, it goes based off of the file date. So if you file prior to that loan closing and that claim is backdated to the original file date, the VA is going to go and refund that entire funding fee. It will get automatically sent to your bank account on file that you submit when you do this disability claim. So that's a very, very important one. If you're working with a lender and you have no service connection, you might want to start thinking about that.
I've had clients where they were refunded the fee after the lender charged them.
Yep, that happens because it's all based off of the intent to file date. So if you go to the VA, if you just Google submit a VA disability claim online, you could do that online, and everything is date and time stamped. So when you do that intent to file, let's say you do tinnitus, it's going to be time stamped and dated on that original file date. So if that date and time is prior to that loan closing and you're a veteran, that will come back to you. And I say if you're a veteran because this is completely different for active duty service members. Active duty, there's a process called a pre-discharge claim, which is it's completely different. I'm not going to cover that here, but if there is anybody on active duty, you can get with me offline and I'll explain that process. But they do a good job about people prior to ETSing explaining this process. So joint loans. A lot of people think VA loans are only for veterans and only for a veteran and the spouse. Traditionally, yes, but there is a loan that we could do called the joint loan. So that's a loan other than a veteran and a spouse. Example, a veteran, a fiance, a veteran and a relative, or really any person. You know, it could be, you know, a close friend, you know, that's like family to you that you want to buy a house together. There's caveats to this though, and we're going to go through that. This always requires prior authorization from the VA. So if we are writing a joint loan, prior to the loan being clear to close, it will be sent to the VA for a review and approval. That takes time. Down payments required in these type of loan examples. So if you're getting a loan with, it's a veteran and let's say his parent, mom, dad, brother, sister, the VA is going to require that you put 12.5% down on that loan. And the reason they require 12.5% is because they guarantee 25%. So they will guarantee the veteran's portion, but they will not guarantee the co-borrower's portion. So that's where that 12.5% comes into play. There still will not be PMI on the loan. A veteran and fiance who intend to get married prior to the loan closing will not be treated as a joint loan. Title must be held as veteran and spouse. So I've had this before where I have a veteran fiance, they're getting married, right? So we just send the application in as married, and you will have to provide most likely a marriage certificate. A lot of times they won't ask and they're not required to, but in the event that they do, title is going to have to be held as veteran and spouse, and you may have to produce an evidence of a marriage certificate. I closed one recently where the certificate wasn't available from the state for at least 4 weeks. So I made the investor do a post-closing condition for that marriage certificate. So it could totally be done. Very important factor on joint loans. Income strength of the non-veteran cannot compensate for income weakness of the veteran. So if you are applying for a loan with a co-borrower and they are making the majority of the money in the loan, the VA is not going to accept that because they want the veteran to carry their own weight on the loan. Any borrower on a joint loan who does not use entitlement, such as a non-veteran, does not have to intend to occupy the home. A lot of people think non-occupant co-borrowers, technically you can't do it, but on a joint loan you can. Alex, you want to hit some occupancy topics? I think this is very important for realtors.
Sure. So generally speaking, when you're buying a house and you're using VA benefits, you have to occupy the home within 60 days of closing. So that means that, for example, you purchase the property and the seller still lives in the property. Well, they have to get out and you have to get into that house within 60 days of closing. Veteran certifies that he and she will personally occupy the property as his and her home at a specific date after the loan closing. So this basically means that you're not buying the property for somebody or as an investment. You actually buying it as your primary residence, and you are promising to occupy the property.
Yeah, and another big thing with this too, if you read the language, this is language directly out of the guidelines. I do not type this. This is right out of the 26.7. So you'll see language on here: personally occupy the property as his or home at a specific date after the loan closing, and there's a particular future event that will make it possible. So, right, Alex said 60 days. That's your initial standard occupancy timeline. But let's say you have orders for I don't know, we'll say Ranger School, right? That's minimum 90 days. Once you can't occupy in 60 days, but there's a particular future event there, right? That's going to allow you to occupy at a certain time. VA will be flexible on that. Go ahead, Alex.
Occupancy. Yeah. Occupancy by a spouse or dependent child satisfies the occupancy requirement for a veteran who is on active duty and cannot personally occupy the dwelling within a reasonable time. So this is for your active duty service members. You're being deployed and you need to satisfy the occupancy requirement. So your child or your spouse moves into the property, you go off to, same example, Ranger School, and you satisfy that condition.
Yep.
Can also be applicable due to distant employment other than military service contact. So this one I'm not very familiar with. I'm gonna have to rely on you, Steve, to explain.
Yeah, so this is very, very scenario based. So I had a loan where the veteran was still a police officer up in New Jersey, getting ready to retire, looking to move down to Florida, and I had the VA authorize that through this guideline, right? The spouse was going to go down there with the children, and he was going to occupy within about 12 months. So that specific scenario needs to be carefully handled. And I mean that because once we take that loan application, we have the facts behind what's happening here. We have to get the regional loan center involved to authorize that occupancy. You have to contact the RLC. It says it. RLC is the regional loan center. It says it directly in our guidelines. So it's very important. Go ahead, Alex.
Occupancy at a date beyond 12 months after loan closing generally cannot be considered reasonable by the VA. So I think this is also for your, active duty members. If you cannot occupy within the 12 months, it basically, your loan will not be approved. So if you have orders, go ahead.
Yeah, exactly. So you got that standard 60-day window, but they're saying like, hey, if you can't be there within 12 months, it's probably not going to be considered reasonable.
Yeah.
Hang on one second.
Sure.
All right, so some of the products VA has: traditional 30, 20, 15-year mortgage, cash out refinance. So if you own a property and you got a good amount of equity in your home, you could pull up to 100% of the home's value. Traditionally, if you're pulling up to 100%, there's going to be some serious loan level pricing adjustments that are going to affect the rate. So when we look at these loans, we try to keep you below 90 loan to value. So that's what that means is if your house is worth 500,000, we want to keep We only want to pull up to 90% of that value. If we pull 500,000, that's where we're going to start getting some loan level pricing adjustments, and the rates are going to be higher. Interest rate reduction refinance loan EARLs. They are streamlined refinance, limited documentation, no appraisal required. So you own a home. Let's say you bought a home in the past 6 months. A lot of my clients closing on their homes in the sixes. Fast forward a year from now, rates are in the low fives. This is what they'll be doing: an interest rate reduction refinance loan. Simple credit check. As long as your mortgage has been on time for 6 months and it's current, you're good to go. VA renovation loans. So similar to an FHA 203K, it allows the borrower to finance the purchase price and home repairs. Must have documentation provided by a licensed contractor. So if you see a home and you want to, let's say, put $100,000 worth of renovation work in it, you're buying it for 400, we could give you a loan for that for 500,000 essentially. Interest rates are a little higher with this product because it's non-traditional product. One-time close. This is a recent product that was rolled out in the past 2 years. 100% financing on a new build. You could purchase the land and home all in one loan. No payments made until the project is complete. There's a lot of work that's involved in this with contractors and architects, but if you find land, this is not a very popular product by me up in northern New Jersey because we do not have land, but you can also buy a home and knock it down and rebuild as well. So that's a cool thing about this product. So how do you build generational wealth with a VA loan? First part is you could have more than one at a time, right? You could retain your prior property or rent it out, have somebody paying your mortgage down as that home appreciates in value year over year. 100% of the lease agreement to offset your departing primary. So if you own a home and you are going to be retaining that and leasing it out, every other loan program will only allow 75% of the lease on that departing primary, which means you could have an expense factor, and that lowers your ability to qualify on the next one. VA will allow us to use 100% of the lease agreement. So if your mortgage payment is $3,000 a month and your tenant signed a lease agreement to rent your home, say, February 1 for $3,000 a month, that is a complete wash. Whereas if you were doing a conventional loan, you're going to have 75% only on that lease agreement. VA will allow 100%. So they're much more lenient with that. Gives you more purchasing power. If no lease is in place, the lender may still use proposed rental income to offset the departing primary if the local rental market is strong. Most areas that we are in has a strong rental market. So what investors look for in something like this is borrowers with good credit, reserves. So if there's no lease in place, we could still offset that housing payment with the intention of you leasing it out. Continuing on, VA allows the ability to purchase a 3 to 4 unit property with no money down. That is huge. You must occupy one of those units. You cannot use this product as an investment purchase. You have to live in one of those units. You need 6 months reserves if you're using rental income to qualify. So what does that mean? If your mortgage payment is $3,000 a month, you need to have $18,000 in reserves after closing costs. That's the VA's way of protecting the veteran in the event of vacancy factor. If you can't lease it out, they need to see that, hey, that payment will be able to be made. Prior landlord experience or use of a property management company for rental income to qualify. So if you had a prior landlord experience, we would see that on your tax returns through Schedule E. And also, if you don't have that, we could sign a 12-month property management agreement with a local property management company, and we have to include that in your debt ratio calculation. Typically, I see them taking 10% of the monthly rental.
Hey, Steve, do you mind if I cover 2 items?
Go ahead.
So the 6 months reserve required, I want to expand on that a little bit. Which funds will qualify? So your 401k will qualify as your reserve. Your savings will qualify as a reserve. What else?
Just liquid assets on hand. So retirement accounts. Yep. Anything that we could prove that's liquid, right? So if you have a 401k and, you know, the balance is 100,000, you know, typically they're letting us look at 60% of that. A lot of times on 401ks, you have the ability to draw from them. So their drawable amount is what I look at as well. Really any type of liquid asset that you have on hand, stocks, you know, anything that can be liquidated and put into your bank account, we could use that towards reserves. Gifts, we cannot use gifts as reserves. So
Okay, excellent. Thank you so much for explaining that. And as far as prior landlord experience, how do you prove something like that? I've had clients where they bought a multi-unit property, and I do not remember them having to prove that they have landlord experience. For example, this one particular client bought a triplex, and go ahead.
Yeah, so prior landlord experience can be, you know, justified through a letter of explanation from the veterans stating that, you know, they owned a multi-unit property in the past, and we could prove that. If they currently own a multi-unit and they collect rental income, it's right on the Schedule E on the tax returns. Or if none of that is available, we just include a property management company. So a local property management company, you sign a 12-month contract with them, and they will be responsible for collecting rent on that property on behalf of you, the landlord. And that's how we get around that.
Thank you. I appreciate that.
No problem. Rental income may be used to qualify. So if you're purchasing a 4-unit, you live in one, those other 3 units, the appraiser is going to determine the fair market rent on those units, and we will give you that income to qualify. 75% of that lease agreement are the fair monthly value determined by the appraiser, right? So if it's $1,000 a month for every unit, we'll give you $750 for each unit that you don't occupy. Make sense?
Yeah, so this is actually a very good way to build wealth. I had many clients who left the military and have bought a multi-unit, whether it's duplex or triplex, and then they lived in one unit, rented out the 2. They didn't have much income back then, but the additional income from the rent qualified them, and so they were able to buy the property. It's actually, I think, the best way to grow your wealth and kind of get out of that rental holding pattern, you know, as you constantly rent as opposed to buying or owning.
Yeah, and just remember, if multi-unit is something that you're looking to do, right, just know 6 months reserves, landlord experience too. So it's not just like anybody could buy a multi-unit. There is definitely some requirements that we need to hit, but
oh, absolutely.
Wealth, you know, you can
build
generational.
Yeah, you absolutely.
Alex, can I keep it moving?
Rent 10% off the rent in order to manage the property, so you can qualify that way.
Yeah, exactly. Pre-approval process. This is the first step that needs to be taken in the home purchasing process, right? So before you start looking at properties, you need to be pre-approved. You need to understand what you can or cannot afford. You complete an online application, you upload supporting documents such as pay stubs, W-2s, tax returns, bank accounts. Lender will pull your credit and request COE. Your credit score is going to dictate your interest rate. The higher the score, the better terms you will receive. You could always take a peek at your credit, annualcreditreport.com. Once a year, it's available to you. It's never too early to get pre-approved. I say that because if there is issues that we're dealing with, it's better to know them now up front so we could start fixing them. Closing costs, almost towards the end here. VA loans are no money down. That is a fact, but you're still responsible for closing costs. So typically I see them ranging from 2.5% up to 5% of the purchase price. In New Jersey, closing costs 3.5%, depending on what lender you're looking at, 3%. Pennsylvania, they could be a little bit higher because they collect a lot more escrow in taxes because of the way the taxes are distributed. Also, too, there is transfer taxes on properties that you'll be responsible for. And in New Jersey, you do not pay transfer tax as a buyer unless you agree to that contractual term.
And let me add to what you just said. In Philadelphia, it's actually even higher. So you probably look at about 6.5% because of their transfer fee. Philadelphia transfer fee is 2.14%. It's huge. So it's double basically as opposed to anywhere else.
Yep. And that's split by the buyer and seller, correct, Alex?
Well, that's the buyer split I'm already referring to. So the actual split is 4.2.
Exactly. Yep, because I just closed on a 350 2-unit in PA, and the buyer paid around 7,000. So I guess that's that 2% there. So it makes sense. Yep. The only closing cost that can be rolled into the loan is the VA funding fee. You may hear people say, I'm going to roll in my closing costs. That is not accurate. That cannot be done. How do you not pay closing costs is a question. There's ways. They could come in the form of a gift. So you can receive a gift from somebody to be able to cover closing costs. Seller credits and concessions can cover your closing costs. So if you're bidding on a home and you're asking for a concession, right, that could cover your closing costs. If your closing costs are $15,000 and you're asking for a $15,000 seller credit, you can come to the closing table with no money out of pocket. I've done it plenty of times. That doesn't mean everybody is going to accept those terms. It is a competitive market in some areas. So that's something that you and your realtor will discuss. Hey, do we have the ability to go under contract with these terms?
Yeah, let's talk about this a little bit more. So VA allows up to 4% in seller concessions. Is that correct?
Yep, 4% of the purchase price are reasonable appraised value.
Okay,
Correct.
so potentially if your closing costs are at around 4% and you're asking the seller to cover some of your closing costs, you can basically walk into this house with simply nothing. You do still need a escrow deposit, but that it will be refunded to you pretty much.
Exactly, right? So if you make an earnest money deposit of $2,500, I'll give you my scenario I closed on December 28th. Earnest money deposit of $2,500 was made. Seller concession of $10,000. Closing costs came out to about $11,000 total. Buyer got a $1,500 refund at the closing table, right?
Yeah, I've had that happen many times.
Simple stuff.
Yes, and again, it depends on whether or not the seller will accept those terms. So, for example, if you're shooting for a house that is really thought after, really good condition, and then there's competition for it, it is unlikely that the seller will accept those terms. They will simply go with another buyer. However, if the house needs maybe a little bit of repairs, a little bit of TLC, nothing that, VA loan will flag, you can definitely get the seller to pay for it, especially if the home has been sitting on the market for 20 plus days. At that point, they're more willing to, a little bit more flexible and they're willing to cover those concessions because they want to sell the home.
Exactly. So good stuff too. And just a little bit about seller concessions. It's very in depth. I don't have it in this slide, but the 4% limit, just so everybody knows, does not include closing costs, which means you could get 4% in concessions and the seller could still cover your closing costs. Why is that critical? Because I could use that 4% to pay down debt for you to qualify on the loan, and then they could cover your closing costs on top of that to a certain extent. So that is just where very sharp lenders know how to make a deal work through the guidelines. It's
And
not
you can
going to
do a
help.
buy down as well.
Yep. You could use those, you could use those concessions to buy down your rate, lower your monthly payment, temporary interest rate buy downs, 2-1, 1-1 buy down. So there's a lot of things that could be done. But the reality is we need to make sure that we have a concession available to us in the first place. You see what I'm saying?
Right.
If I pre-approve you and tell the realtor, hey, $15,000 seller concession, and the seller agrees to those terms, no problem, we're good to go. Doesn't mean they're going to agree to it, but it's ways that we can make you a homeowner through the flexibility of this loan.
And since we're kind of covering the rates a little bit, what are the current rates? Just curious. And this is January 6th, 2024.
Yeah, so you could always Google average market rates, put in your credit criteria. But if I were to price out like a 740 credit score VA loan, you're probably going to be in the low sixes, and we could definitely get into the fives with discount points, depending if you elect to pay discount points to buy down your rate, which I'm not a big fan of right now, because as rates are going to continue to drop throughout the next year because of inflation data is starting to provide good results here, that it's tapering off. Rates are going to continue on the downward trend. So we do not want to buy down our rate considerably, because we know that there's going to be a refinance opportunity here. So
yeah. And we can always not, as we're shopping, we don't have to lock the rate right now, knowing that, for example, Fed is going to drop the rates again, and then we can perhaps lock later on down the road closer to the settlement.
Yeah, absolutely. You could float your rate the whole way. Only thing buyers have to realize when they float their rate, there is a risk of it going higher, and there is a not risk of it going lower, right? If it goes lower, that's great. But I always tell people, I do not have a crystal ball. I follow the market, but I can never predict it. So if we go under contract and you're in New Jersey, you clear attorney review. Pennsylvania, you're not going in attorney review. You're going under contract after the offer is accepted. We will then price it, and if you like it, you lock it. That's the mentality I have, right? If I give you a rate and you're comfortable with that monthly payment, you lock it. If rates drop off, I can negotiate with the lender for a float down or move the file, and that's because I'm a broker and I have multiple banks to shop. So the last thing is, I always tell people the VA home loan is a loan other buyers can only dream of obtaining. Who wouldn't want to use 100% financing, lower rates, and no PMI? Everybody would, but they didn't do what you did. They didn't raise their right hand. You've earned the right by serving our country, and it's my job to facilitate your dream of homeownership. And I thank you all for your service, because without people like us, we wouldn't be able to have opportunities in life like this. So,
amen. Just to cover real quick, as far as the markets that we cover. So I cover Pennsylvania and New Jersey, and Steven does the same thing. What other states are you licensed in, Steve?
I could do Florida, PA. Our branch is licensed in Connecticut and Georgia as well. But typically my main areas of attack, PA, New Jersey, and Florida, with New Jersey being about 90% of my business. I've originated probably the most VA loans in New Jersey this year. So that's definitely my stomping grounds.
Yeah, PA and New Jersey for me as well. If you're okay with everything, then we can open up the floor for questions.
Yeah, just one at a time. Anybody who has questions, go ahead and shoot.
There you go. John has a question.
Okay, thank you, gentlemen. That was right on time. I got a lot of information I needed. Question I have: I'm actually about to settle on a major car accident I had a few years ago. It's coming into settlement now. My question to you fellas, and again, thank you for your service, both of you. My question is, I want to do this VA loan, and my settlement is going to be significant. I don't have a good, unfortunately, I don't have. I have a very poor credit. I'm not even, going to try to. Hey, let's see what his is. I know mine is not the best. I had a rough coming up of it. Okay. That being said, say for example, just throwing something out here, and I'm 65 years old. Okay. So say I find a home, and I live in Pennsylvania. I was actually looking in the Aston, Springfield, Delaware County area. Say I find a home for $500,000. Now, in order for me, and I'm a disabled vet. I'm a vet. I'm disabled, but not through the veterans. I'm not service connected. Anyway, so my thing is this: I get like maybe $1,700 a month, as far as my money, and let's say there's 500,000. How can I guess what I'm going to say is, how much money theoretically would I put down, say for this home, and to have my mortgage to be, let's say, within that, I have to live, let's say $1,200 a month. And
Yeah.
again,
So,
and I apologize for this. Again, my settlement is going to be life changing for me. So it's not like I'm getting $50 or $5,000. It's going to be life changing. So I'll let you answer the question, please.
Thank you, John.
yeah, so it's going to be very, very specific on the property that you're buying, the price of the property, the annual taxes, and your ability to repay. So if $1,700 a month is your monthly income, we're going to need to have that payment, at least that housing payment, at least half of that, most likely, in order for you to qualify. So for you, this is not a snap of the finger process. For you, what I would tell you to do is get with a lender. Once that settlement comes in and you're able to show those liquid assets, you drop a loan application, because credit is very, very important. When you have heavy liquid assets and you're able to pay down debt that's attached to your credit report, that will help us to improve your score and make the necessary corrections to set you up for home ownership.
Okay, that's awesome. Now, I guess my question, obviously, you two fellas are very knowledgeable. So, moving forward, I probably settle here in the next week or so. When I did, do my screenshots of both of your numbers. I guess I can contact one of you all so you can like grab me by the hand.
Absolutely.
We got you, dude.
Okay, that's what I'm concerned about, because, like I said, I know I'm gonna be able to put down a substantial amount to get me out of this apartment. As a matter of fact, fellas, I'm in a shelter right now because I had a fire 2 days ago, but I'm okay. I'm okay.
You are.
So and with this settlement being due, I was already my mindset is, hey, I got to buy a home, and I call it generational wealth, to leave my children and grandchildren something. And God bless me without dying in that car accident with having a good settlement coming my way. So I can reach out to you all when I'm ready to be led by my hand like a little 5-year-old, correct? A 5-year-old veteran.
Yeah, man, we'll definitely take care of you, and we'll get you squared away.
Yep.
Well, I thank you, gentlemen, for taking my question. I know it was long-winded, but you've given me a whole, I'm excited about this now, because again, you hear myths about the VA loan, and
that's why we do this. This is exactly why we do this.
And I appreciate it, and I hope everybody else that listened in appreciate it, because I'm ready to rock and roll now. I'm feeling,
right, Jeff.
I'm not feeling 65. I'm feeling like maybe one of you guys, 25, 30. I don't know.
Yeah, you're all fired up.
Thank you, gentlemen.
Yeah,
All right.
absolutely. Anybody else?
Louis, you have a question?
No, it's good information. I mean, it's a lot more clear. I had originally years back did apply while I was on active duty through the home loan, so it was a very easy process. But you guys clarified a lot of stuff that was not explained to me originally when I did apply the first time around. So this definitely gave me a little bit of a clairvoyance on the processes. So
Yeah,
thank you.
it's just so there's a lot of data out there that shows the average lender closing 1 to 3 VA loans a year. And if you're not living in this, man, you're not going to know the ins and outs of it. You know, this is all I do. This is pretty much all Alex does. So it's just, we're very proficient in our craft because we're living in it. You know what I'm saying? We're both vets. We both use the benefit. And, you know, it's our job to represent people to the best of our ability. So we're very educated because nobody really provides this education outside of, you know, what I do or other people do. You know what I'm saying?
Yes, sir. But I appreciate you guys taking the time out to explain this a lot better.
Yeah, and
pleasure.
just, you got our numbers, right? So if something pops up and there's a question, or you got a buddy that's, you know, looking to buy and they have a question and they're not getting the right answers, please reach out to us so we could feed that proper information to them.
I do have your number, but just in case, if you guys could just send any information to my email, I greatly appreciate it.
So we're gonna send out the recording, the recording of the entire meeting to you. The link is gonna be provided. You'll just have access to it. Okay.
Okay. Thank you, guys.
Yeah. And my email will include all the information, so you'll be good to go.
All right. Thank you. Thank you guys again.
All right.
Great job on the info.
All right, I think that's pretty much a wrap. We're good to go. I think you just have Lewis and John left here, so we spoke both of them.
Yep, that's correct. Everybody else took off. All right.
All right, thank you
We'll
guys.
finish on that.
Enjoy your Saturday. It's Miller time, fellas.
Thank you.
There you go.
Take care.